Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 20th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. For my commentary on everything from economic to geopolitical and market analysis, please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today across the pond, pretty quiet, but here in the United States we got Philly Fed manufacturing came in at 22.0, was expected to be 25.6. Philly Fed is a indication of how manufacturing is doing in the Philadelphia area. Then we also got unemployment claims coming in line with expectations at 244,000, expected to be 241. Consumer confidence waned, or actually it came up a little bit, was -4, expected to be -5. And then we also got natural gas storages coming in at 54 billion cubic feet, was expected to be 49 billion cubic feet. So a bit of a increase there. That's it for the economic data for the most part. We got crude oil right now just slightly in positive territory, up 3 cents on the day, coming down and testing that 23.6 fib level that we were talking about yesterday. It looked like that was going to be a target. Later on in the day after our market commentary, the market really slumped down and actually pulled down the broader market of the equities with it. So that was pretty dramatic at the end of the day with that sell-off in crude oil. It was down quite a bit. But today finding again support right around that fib level. If we break below that again, my 45.42 area could still be in 45.50 area could still be in line if we kind of really start selling off and start to see a lack of consumption of gasoline and distillates. With this manufacturing pullback, we could easily see manufacturing weighing on the distillates, because distillates are usually what goes into the manufacturing process with plastics and things of that nature. So keep your eye out for those. Then we have gold futures right now down about $4.5, which is expected with the equities pushing higher. We're going to see a little bit more weakness in gold futures, but it is being held up by the 9-day moving average, as you can see right here. Could easily slope off and want to come down here right back to the value area in short step. One thing to note with that gold futures, though, we did see that cross. I did want to mention that with the gold futures. We did see this cross happening, which is a sign of bullishness. So despite the fact that the market is looking to want to turn over, it is still a pretty bullish sign for the longer duration for gold futures. Anyway, on to the bonds. Bonds coming off again today as the broader equity markets kind of push higher. Bonds almost down a point right now, and again being supported by that short-term 9-day moving average. Then on to the Dow Jones. We're starting to see this cross happening now with the 9-day and the 50-day. It's a little less of an indication of bearishness because it's the 9-day and the 50-day versus the 200-day and the 50-day. But again, still signaling a little bit of bearishness. Today's market action being up over 150 points right now in the Dow, that could really just kind of pull that off as they just kind of kiss, if you will, as if it were down here where you just get a slow little blip on it on the cross there. So doesn't really necessarily indicate a long-term trend when we see those two crisscrossing. But the Dow Jones up nicely today, as with the NASDAQ up about 42 points. This is what I was talking about. Even the NASDAQ yesterday was the one that was in positive territory, but with that crude oil falling out of bed, it really pulled that broader market down. I also got a couple questions about IBM because I mentioned IBM pulling down the NASDAQ because it was so much. I know the IBM is not in the NASDAQ. It's a blue chip. It's in the Dow. But at the end of the day, it being a tech and NASDAQ being tech heavy, that's why I was speaking of that relationship to tech and may not have been very clear. Then on to the E-mini S&Ps, up 16 points on the day, again retracing all of yesterday's losses. And but we are still in this trend area, this tight trending area that we were talking about. As a matter of fact, one could say it's kind of creating a flag here, and to look for it to bust out of that area, and it looks as if it is going to today, which could be a sign of bullishness as well. Then on to a couple of things that I've done. Oh, actually, let's talk about the E-mini S&Ps. This is the rally we're seeing right now on the 30-minute chart of the E-mini S&Ps. For the most part, overnight, we were really kind of trending sideways, got a little bit of pop overnight coming into this morning, and then on the economic data, we started really seeing the market moving higher, and basically coincidentally coinciding with the Philly Fed, which being worse than expected is bizarre that it wanted to rally on that, but I guess expectations could be that if we're starting to see manufacturing and things of that nature, the economy slow down a little bit, Fed may hold off on interest rate rises. That's, I mean, all speculation as a whimsical theory at this point, but at the end of the day, we're really seeing markets really push higher, and we haven't seen great economic data coming out that there's really robustness in the overall economy. All right, now on to what I've done with eBay. I tweeted this out yesterday with eBay and Qualcomm, the two earnings trades that I put on, and with eBay, I put on a strangle in there. I did the April 31.5. Actually sold the 31.5, 36 strangle, so the 31.5 puts and the 36 calls to create that strangle. And originally I sold that eBay trade for 49 cents, bought it back this morning for 6 cents, right on the open, just like I talk about in these earnings webinars that we're doing right now. So go to Pro Trader Strategies and check that out. The market maker move on this was around $2, so I was never really in jeopardy of it being hit, but decided to cover this rather quickly right off the bat. As a matter of fact, I put this order in to buy it at 6 cents before even the open, just so that I could get in right away. Then with Qualcomm, same situation, went in with a strangle, did the April monthlies that basically expire tomorrow, and sold the 48 puts and the 56 calls in there. So that wasn't ever really in jeopardy. 48s were well below the value area low, so I could have seen it want to come down there and test that, or the 56s were well above this value area. This is going to be the 70% of where the volume is traded. This is 70% of where the time has been spent. There's just not really a whole lot of trading going on up here, despite the fact that you can see we were there for quite a long time, and the time node is quite large, but there just wasn't a lot of participation. Whereas down here, this is where people are finding value and deciding that that's where they want to put their money where their mouth is, in a sense. So I decided that I was well outside of those two areas and would be pretty happy to be in there, barring anything crazy like with IBM coming out and people looking at their sales of their old products and not liking it overall, when their sales of their products that have high margin are doing very well. So with Qualcomm, got out of this, same thing, put that trade in at the same time with eBay before the market opened. Originally sold it for 48 cents, bought it back for 6 cents again there. And that's about all I've done for today. These are the earning trades. These are how I set them up. There's different strategies that we can build around these earnings trades depending on our directionality. For these two trades, I just thought that they were going to be pretty much market bound and or range bound in a sense, so that's why I decided to pick those kind of strategies. I'm going to go into why and where to pick different strategies in these webinars. So go to protraderstrategies.com and sign up for the webinar tomorrow. We're going to be doing a series of these and eventually getting to the point of how to manage these, like the IBM trade that I have on, and it's gone against me. That is the fact of life, but we're going to have to deal with it. I'm going to show you how to be mechanical and stay with that trade in order to get yourself into profitability when we have something that has gone against us. So go to ProTraderStrategies.com, sign up for that. Hope to see you all there. If you can't take that, take it easy.